A lot of people want me to be wrong, right, about one of these views, and I probably will be wrong about something. But to be clear, so that there's no ambiguity about this, right? And so that, I'm not hedging my view on this, right? I think that dominance is going to explode past the bull market support band. That is what I think. While it is true the Fed's likely going to cut, and it's true that a lot of people think that's bearish for dominance, I would argue that unless they get below the neutral rate or the 2-year yield, it's actually bullish for Bitcoin dominance.
According to Cowen, most investors make a critical mistake. They dismiss Bitcoin dominance as irrelevant, but in reality, it's the clearest mirror of market structure and liquidity flows. Once you understand Bitcoin dominance, Cowen says, it's so much easier to be successful in the cryptoverse. Bitcoin dominance, the ratio of Bitcoin's market cap to the total crypto market cap, shows how much of the crypto universe's value sits in Bitcoin versus altcoins. And over the past few years, one trend has been consistent. Altcoins bleed value over time back to Bitcoin. Despite the hype around alt seasons, the data tells a different story.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
As I've said for the last 5 years, Bitcoin dominance is the key to unlocking the secrets of the cryptoverse. Once you understand it, it is so much easier to be successful in the cryptoverse. So much easier. If you ignore it and just say, that there's no point in following it, then what ends up happening to a lot of people is they end up just FOMOing into altcoins under the sort of these false promises of these elusive alt seasons that have remained elusive for the last 4 years. And then before you know it, you look at a chart like this and you realize that you were buying alts that just kept on bleeding back to the king, right? So not only were you buying something that was riskier than Bitcoin, but it not only was it riskier, but it also gave you a lower return as this chart just kept going lower and lower. But I should remind you guys that, again, I'm not talking about your altcoin. There's plenty of altcoins that I'm sure are doing absolutely fine, but collectively, they keep going down. Now, when you look at Bitcoin dominance and you pull up the trusty bull market support band, there are a lot of people that are under the assumption that it's going to get rejected here, right? And I will say, there's always a chance that that's what happens, but it's not even close to being my base case. So a lot of people a lot of people want me to be wrong, right, about one of these views, and I probably will be wrong about something. But to be clear, so that there's no ambiguity about this, right? And so that, I'm not hedging my view on this, right? I think that dominance is going to explode past the bull market support band. That is what I think. So if that does not happen, then I'm wrong. And that'll be what I'm wrong about. But I don't see a compelling reason for why dominance won't go through the bull market support band, but I will address the most common ones that I see. First of all, before we get into the narratives, I just want to remind you that I do not believe that price follows narrative. In fact, it's the other way around. Narrative follows price. So I don't need to sit here, in my opinion, and justify my view based on the news cycle, right? I don't feel like I need to do that, but I'm going to do it anyways. But I don't think that is I don't think that's the way to go about doing this. I think what you look at is in all these prior bull markets, you look at what Bitcoin dominance did in September and notice that that's when it put in these lows, and then it ultimately got these rallies into the end of the year. And I just can't help but feel that this time is going to be no different. So what I think is going to happen is I think that the people that think dominance is going to get rejected here I think they are going to get wrecked, because the more likely outcome, by far, in my opinion, right, by far, is that liquidity flows back to the king. By far. That is the most likely outcome. If you look at 2020, you'll see that Bitcoin dominance basically went up into about mid-November, got a brief pullback to the bull market support band, and then went up. If you're getting tired of waiting, just remember, in 2020, look at that. Look how long it took, right? I mean, it took months for it to get back above it. And really, it was the week of October 19th that Bitcoin dominance got back above the bull market support band. We're currently in the week of October 20th, right? So, like, who's to say it's not about to happen any moment or early next week? Who's to say it won't? Like, I think it very well could. If you look at 2017, Bitcoin dominance got back above the bull market support band the week of October 16th. And it continued higher into early November. It got a pullback, and then it went higher and put in a higher high in early December, early to mid-December. In 2020, that higher high was again in like late December on Bitcoin dominance. If you think that we're all just blowing smoke here, comparing it to 2017 and 2020, because you more so subscribe to the monetary policy view, well, to some degree, you're speaking my language, right? Like, I mean, that's kind of my language, in you know, by some stretch of the imagination. And even in that case, you could say, well, you know what? Back in 2019, when the Fed was just a few months out from ending quantitative tightening, right? They ended QT in September. Look where Bitcoin dominance was just a few months before they ended it. The same spot that it is today. Now, back then, it wasn't below the bull market support band, but it still went from 60% all the way back up to 70% a few months later when quantitative tightening ended. Now, the narratives, right? The narratives that why could I be wrong, right? Well, one is the most obvious one is, well, what if the Fed ends QT? Well, if the Fed ends QT, then I will address that when it happens. I think some banks like JP Morgan think the Fed's going to end quantitative tightening at the next FOMC meeting. Maybe they do. Maybe that is where I take the fall on all this stuff, and maybe that's where I get wrecked on my views. The last time Powell spoke about it, from what I remember, is he made it seem like it was going to happen, but potentially still several months out. So it's possible that they end QT, and if they do, then I might have to adjust my view. But I'm not there yet, right? I'm not there yet. The other thing is they're going to lower interest rates more than likely, so wouldn't that be a reason? Wouldn't that be a reason to be bearish on Bitcoin dominance? Well, the Fed started lowering rates in September of 2024, and Bitcoin dominance went from 57% to 66%, right? I mean, so it's like, what's the point? Like, what's the point? The point is that they're getting closer to the neutral rate. So if you look at interest rates and you overlay the 2-year yield, you'll notice that, and we pin this to the same scale, you'll notice that the 2-year yield, if you want to think about it as like the abstract neutral rate, which there's some arguments there that it's not, but it's currently about 3.5%, whereas the Fed funds rate is 4% or 4.25. The problem for the Fed is the problem for the people that are bearish on dominance because of a rate cut. A 25 basis point rate cut is going to get you to 4%, which is still 50 basis points above the theoretical neutral rate. You could argue the reason why rate cuts have had no effect on alt Bitcoin pairs to the upside in any durable fashion is because while they're cutting rates, it's still restrictive.
In other words, follow the liquidity, not the headlines. Cowen's technical analysis reinforces this thesis. Every major Bitcoin dominance breakout in history, from 2017 to 2019 to 2020, eventually pushed dominance near 70%. And while he admits the same absolute levels might not be reached this time due to the rise of stablecoins, the direction is clear. The floodgates for dominance are about to open. He expects this next leg up to to push dominance decisively above 60%, potentially even 65%, as altcoins continue bleeding against BTC pairs. And it's not just a short-term narrative, it's a structural one. Cowen and macro thinkers like Raoul Pal have linked this to the 4-year debt refinancing cycle, the same underlying rhythm that drives not just Bitcoin, but the stock market, oil, and even corporate debt markets.
So you could argue that the way to get to an unrestricted territory is to cut below the 2-year yield. But again, that hasn't happened. And again, it's probably not going to happen at the next Fed meeting. One of the issues, too, that the Fed's facing right now is with the government shutdown, they're not really releasing a whole lot of data. There does exist a scenario where, had they been releasing the data, maybe things are worse than they seem, and maybe that will lead to the Fed cutting 50 basis points or more. But again, if you don't have the data, you can't know. And if the Fed can't know, with inflation trending up, they can't really cut more than 50 basis points right now, or more than 25 basis points right now. So if you get a rate cut, all it's going to do is it's going to get you back down to 4%, but you're still 50 basis points removed from the theoretical neutral rate. Now, again, is the 2-year yield comparable to the neutral rate? That's up for interpretation. But what you'll notice throughout history is that the Fed follows the 2-year yield, right? So if the 2-year yield is dropping, the blue line, the Fed follows. If the 2-year yield's going up, the Fed raises rates. Again, the Fed does not tell the market what to do. The market tells the Fed what they need to do, and the 2-year yield is telling the Fed what they need to do. What's really interesting is that the 2-year yield was telling the Fed what they needed to do back in September of 2021, and it took the Fed 6 months to get the memo, right? It took half a year for the Fed to raise rates back then. And you could argue, had they raised rates a lot sooner, maybe inflation wouldn't have gotten so bad. But for some reason, they waited so long. Right now, the 2-year yield is telling the Fed, hey, you need to cut rates. They're going to cut 25. Is that enough to move the needle? Probably not. So while it is true the Fed's likely going to cut, and it's true that a lot of people think that's bearish for dominance, I would argue that unless they get below the neutral rate or the 2-year yield, it's actually bullish for Bitcoin dominance, at least right now. If they end QT, we'll cross that bridge when we come to it. You know, if the Fed comes out this week, what day would it be? 29th? Yeah, on the 29th. If they come out on the 29th and say QT continues, Bitcoin dominance is likely going to blast through. The other thing to remember is that when the Fed ended QT in September of 2019, it still wasn't technically the top, right? Like, I mean, again, being technically correct is the best way to be correct. And technically speaking, dominance did not top until, you know, we were in quantitative easing and much lower interest rates. So again, like, even if there is a top around then, it doesn't mean that it doesn't mean that Bitcoin dominance can't eventually get back up to it. But again, like, I would more so subscribe to the idea that you don't need to know what the Fed's doing. You don't need to know the news cycle to look at this chart and see that, you know, usually when you're in these crypto cycles for Bitcoin, it gets these explosive moves back up. And you can see every single one of those moves got Bitcoin dominance to 70%. I'm not saying dominance has to go to 70%. You know, back over here, stablecoin dominance was practically non-existent. And today it's a lot higher. So, you know, Bitcoin is facing an uphill battle for the dominance to get to 70%. Be that as it may, I mean, despite the fact that they just keep minting altcoins, has not stopped alt Bitcoin pairs from dropping lower all cycle long. And as I've said before, this wick shows you where alt Bitcoin pairs want to go. And I think they're likely just going to keep on dropping. So, I know we talk about this stuff a lot. I know it, but it's important, right? And I really do think that this final rotation is continuing. And I feel like I've made 6 videos with that in the title, or 4 or 5 videos with that in the title, but like, it is happening, right? I mean, look at dominance, literally up 6 weeks in a row. it's not going up quickly. But guess what? It wasn't going up quickly in 2020 as either. It wasn't going up that quickly in 2017. It wasn't really moving up that quickly over here in April through June of 2019. But once it started going, it did not stop for a while. And you saw what happened a few weeks ago when it went above 60% and went all the way up to 63. I think the floodgates on dominance are about to open. And when they do, Bitcoin dominance should absolutely soar above 60%.
What it's saying is, at this stage, early stage tokens move faster. And so if it's showing network adoption, even though Solana's an amazing project, I love it, it's moving super fast, the chances are it will outperform, so my use of capital should switch into the fastest horse. Also, you can actually go back and look at like Solana previous cycle and then look at Sui or Ethereum the cycle before. They all kind of look similar style of things, so it gives you extra signal in that.
In terms of cycles, how much weight do you put on them, knowing that crypto is still quite young? So like looking at previous cycles, do you use that information and hold a lot of weight on that information, or do you just know it's okay, this is what's happened in the past, but seeing as we are quite young and it's ever expanding and growing, cycles are going to change and they're going to evolve?
So with the main cycle we look at is this observable 4-year cycle. And that is driven by actually the debt refinance cycle going back to 2008. People think it's to do with Bitcoin itself. It's not. All assets are doing the same thing. It's the same as the business cycle. It's the year-on-year rate of change equals the S&P, it equals the ISM. 2008, everyone reset interest rates to zero. After several years, rates were allowed to go up, but everyone had reset their debts to this 3 to 5 year sector. It creates this perfect 4-year cycle. Our analysis this time suggests that it might stretch by another year. People think it's preordained that it's 4 years. It's not. It's actually because they've actually extended the debt cycle out to 5 years right now. So we think it might extend. But that cycle's not going away. It's the same cycle that's driven the NASDAQ, Amazon stock, Tesla stock, the same cycle that's driven oil prices. I mean, you name it, it's the same thing. So it's there and observable. You can use past parallels, which is interesting, why we use a lot of past parallels. I grew up on that because of Paul Tudor Jones and his famous 1907 crash thing. And a lot of the time, it goes wrong just when you want it the most. But sometimes it gives you contextualized information. Past network adoptions kind of look like current network adoptions and the crowd psychology that goes with it and all of these things. So they tend to work somewhat. They always break when you most want them to do. I famously completely screwed up last cycle where I thought that Ethereum was going to get to 15,000. I thought it had this extra leg and the whole cycle ended. That's before I knew what drove the crypto cycle. I went back because of that learning, that loss. Well, it wasn't a loss because I had call options, and I'd made a lot of money out of the cycle. But it was that mistake that I went back and tried to understand what drives this damn thing. And that's why we had the massive breakthrough with the everything code and this whole kind of macro crypto nexus stuff that nobody's ever done before because of that. It's like, why did that not work? And that was driven on a past parallel plus a bunch of other stuff.
Every few years, liquidity tightens, leverage resets, and capital rotates back into quality, in this case, Bitcoin. Then as liquidity expands again, risk appetite returns, and altcoins temporarily outperform. But right now, we are still in that reaccumulation phase, where dominance strengthens before the next speculative mania. Cowen stresses that these cycles are observable, repeatable, and grounded in macroeconomics, not just crypto folklore. In summary, Benjamin Cowen's message is as clear as ever, and it's one investors ignore at their own peril. Bitcoin dominance isn't just a chart. It's a compass for navigating liquidity cycles, investor psychology, and the flow of capital across crypto.